Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 352 on December the 6th, 2024. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on the AdvisorShares Trust Pure U.S. Cannabis ETF, Bank of America, and American Airlines, and we discuss three new trades on GameStop Corporation, Citigroup, and Rivian Automotive. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC at theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the Dow and the S&P 500 finished the week in different directions, and that's just a reminder that it's always good to know the composition of these indexes, especially if you like to trade their ETFs. The Dow Jones Industrial Average lost 268 points, closing at 44,642 points on Friday. The S&P 500 index gained 57 points, ending the week at 6,090 points. And now it's time for the topic of the week. The topic of the week is how I practice. If you've listened to this podcast for any decent length of time, you've heard me talk about practicing. To get better at any pursuit, practice is required. Today, I figured I would share a few ways that I like to practice. Each week, I save screenshots of the markets I traded in the various time frames that I watched them. Then I look at each trade that I made, whether it made money or not. And I also consider the factors that led to my decisions. You should do this on all trades. If you only isolate the good trades, then you miss out on the opportunity to notice where either your strategy or your execution didn't get you the result that you wanted. I tend to learn more from my losses than my wins. Because I use TradingView, I'm also able to replay an entire day minute by minute. The platform allows me to choose a place where I want to start, and then I can play the entire day bar by bar. This, once again, allows me to reinforce positive behaviors and correct negative behaviors. My third way of practicing is mental. I visualize myself making the trades that would have led to the highest profit of the day. There are countless studies that have shown the power of visualization for pursuits ranging from playing basketball to taking standardized tests. Why not use it for trading as well? There is a performance aspect to trading that lends itself well to visualization exercises. So that's how I practice. Do you have a practice regimen for your trading? If so, send me an email and let me know. I'm always open to adding a few new tricks to my tool belt. So if you have any questions about the ones I mentioned, also feel free to email me. If you use any forms of practice that I didn't mention, definitely let me know as well. So that's it for the topic of the week. Let's go ahead and dive into the review of last week's trades. We're going to start off with the covered call on the AdvisorShares Trust Pure U.S. Cannabis ETF, symbol M as in Mike, S as in Sierra, O as in Oscar, S as in Sierra. At the time, the stock was trading for $4.52 per share. I looked at buying that stock and selling the December 5 call at 15 cents. That could give us a return of 13.94% in 3 weeks. Well, shares of the Pure U.S. Cannabis ETF lost 39 cents, ending the week at $4.13 per share. The call option we sold lost 9 cents, leaving us with a net loss of 30 cents if we were to close the trade out immediately. Now, the stock is matching the recent low that occurred right after the election. I typically am happy to hold the stock and continue selling call options until you cover any losses or the stock rallies. However, there's a bit of a political side to this cannabis issue, so this ETF may not be well suited for the incoming administration. I'm certainly hoping the stock pushes a bit higher prior to expiration, but this is not a long-term hold for me. An adjustment will be needed if the stock does not rally in the next few days off of that recent low that was made in the coming days. So I want to see the stock rally above our break-even point. Otherwise, I'm definitely looking to exit this one. Next up, we have a credit spread on Bank of America, symbol B as in Bravo, A as in Alpha, C as in Charlie. At the time, the stock was trading for $47.52 per share. I looked at selling the December 47 put spread at 19 cents. That could give us a maximum possible loss of 31 cents per spread. Well, shares of Bank of America fell 80 cents, ending the week at $46.72 per share. The out-of-the-money put spread that we sold is now in the money. That spread can be repurchased for a total loss of 6 cents. Now, you would only collect 9 cents for selling the higher strike call spread, i.e. turning it into an iron condor. That means your maximum loss could still be 22 cents. Or you can look to close the trade for a loss of 6 cents overall. Now, I'd lean towards closing out the trade. There's still 2 weeks left for the stock to pull higher. We're currently 59 cents per share below our break-even point. I typically fight the good fight and wait for the stock to go higher. I'd keep this one on a short leash. Closing it out for a small loss is better than the possibility of a loss that's nearly 4 times as large. Our final trade from last week was a debit spread on American Airlines, symbol A as in Alpha, A as in Alpha, L as in Lima. At the time, the stock was trading for $14.52 per share. I looked at buying the December 14 half call spread for 31 cents. That could give us a maximum gain of 19 cents or a 61.29% return in 3 weeks. Well, shares of American Airlines jumped $2.88, ending the week at $17.40 per share. The in-the-money call spread that we bought is now even deeper in the money. That means this spread is likely to earn its maximum return of 61%. With 2 weeks left until expiration and the stock trading more than $3 above the break-even point, no adjustments are needed on this trade at all. I'll definitely keep an eye on the stock until expiration, but this one has worked out. That's it for the review of last week's trades. Let's go ahead and get into the new trades for this week. Now, this is the last week that we're going to use the December 20th expiration for new trades on the show. These trades all have 2 weeks until expiration. The shortened time until expiration makes them inherently riskier because you just won't have as much time to make adjustments. So we'll start off with the covered call. Looking at GameStop Corporation, symbol G as in Golf, M as in Mike, E as in Echo. The stock ended the week at $29.02 per share. I'm looking at buying that stock and selling the December 29 half call at $2.73, hoping for a return of 11.06% in 2 weeks. Now, you enter this trade by buying stock for $29.02 per share and selling the December 29 half call at $2.73. This trade makes the most money if stock prices finish above $29.50 per share. The break-even price is $26.29 per share, and in real terms, the stock purchase will require $2,902, and you'll collect $273 for selling the option. Next up, we have a credit spread on Citigroup, symbol C as in Charlie. The stock ended the week at $72.13 per share. I'm looking at selling the December 72-71 put spread at 36 cents. That could give us a maximum possible loss of 64 cents per spread. Now, you enter this trade by selling the December 72 put at $1.03 and concurrently buying the December 71 put for 67 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $72 per share. The break-even price is $71.64 per share. In real terms, you'll receive $36 per spread that you sell and have $64 at risk. And then the final trade for this upcoming week is the debit spread on Rivian Automotive, symbol R as in Romeo, I as in India, V as in Victor, N as in November. The stock ended the week at $13 per share. I'm looking at buying the December 12 half 13 call spread for 30 cents. That could give us a maximum gain of 20 cents, or that's a 66.67% return in 2 weeks. Now, you enter this trade by buying the December 12 half call for $1 and concurrently selling the December 13 call at 70 cents. This is a debit spread because we are buying the spread and this trade makes the most money if stock prices expire above $13 per share. The break-even price is $12.80 per share. In real terms, you'll pay $30 to enter the spread, and your maximum gain is $20 per spread. So that's it for this week's show. Thank you so much for listening. Again, email me if you have any questions. Don't forget to share any practice suggestions you have for me or any questions you might have about how I practice my own trading. Definitely want to make sure you're getting better. And hey, I eat my own cooking, meaning I follow the rules that I mentioned to you guys on this show. So that's it for this week. Like I said, have a wonderful weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.